What's up, everybody? Ross Quintana with Hustlefuse here today, and this series is my series on learning how to invest in the stock market. So here's what I'm doing. If you didn't catch the first video, last week was my first week investing in the stock market, learning it, don't know anything about it. Check out that video, I'll leave a link. I'm using an app called Robinhood. Mainly because it doesn't charge a fee. It's like one of the most popular ones because it doesn't charge a fee. So it's great for people who want to come in and just try, and they don't want to have to be good enough to beat the costs of the fee for their trying stuff. So you can come in and just put $10 in or whatever and try and buy a stock and see how it goes. So it's great to learn. If you use my link below, you and me both get a free stock. And that could be like a $3 stock or a $300 stock. So definitely use that link. Get started with something already in your account. I love when I get a free stock. It's really cool. You don't have to keep it. You can always turn around and sell it and buy something else that you want. But makes you feel like your portfolio is growing already. So let's dig in. A recap real quick of last week. Last week I had... it went pretty good. Friday looked like this, and so my Friday was pretty solid. That's a good day. Today was a good day. For the week, it looked a little more like that, which again, rocket ship. So, not all things go good forever in the stock market. There's the disclosure. Anytime you're investing in the stock market, of course, I'm not a financial advisor, and I'm not telling you advice on how to invest. I'm sharing what I'm doing. You can win or lose. And this week I took my first big loss. So, was that a spoiler? Did I spoil it? I like dubstep, but you know what I don't like? To see a drop in my stock. Like that. Ah! Yeah, that was a hard day right there. That little line, that downward line, represented the loss of about $200. It just hurts. It just hurts right here. So before this, I gained $9. Maybe lost like $10, $11. Learned my lesson. Don't do that. Don't. I'm getting lessons every step of the way, which is great. Except for sometimes lessons cost you money. So in this case, I have a $200 lesson for everybody in this video. So yeah, that hideous piece of hell right there, what I call the drop, happened because today we're learning about earnings reports. So an earnings report, basically, they come out with the quarterly report and they say, here's what revenue we made, here's what's going on, here's our outlook and all that. They have a upcoming in the app. It's upcoming earnings is the tab that you can click on. It'll show you all the stocks that are going to have an upcoming earnings call. And so I thought, hey, I saw basically what happens is if the news is good, then it juts up like a straight line up, not like a squiggle, but usually it's like bam. And usually it'll be double or triple what it normally might be up or down. And the same goes down if it goes straight down, like this little boy right over there. So I tried 4 different earnings calls. I placed my bet. It's definitely more risky, but I was willing to accept the risk. At this point, I hadn't been trading long enough, and I'll be honest, I didn't think. One of the stocks was like an $18 stock. I think I had 20 shares or 30 shares or something. I didn't realize how quickly it could go because most of these stocks, like that one, it was moving less than $1 a day up or down. So it goes up 50 cents or whatever. And yeah, if you have more shares, maybe you made $6 or $7. But when that share goes down $3 or something, you could lose $100 in a few minutes. I didn't realize that quite exactly because I knew that there was some stuff going on with the big shares. I'll get 1 share in Adobe, or I'll get 35 or 100 shares of Zynga or something like that. I knew there was going to be a difference because for every penny when I owned that many little shares it went up, I could calculate, okay, I'm going to make $1 off of that based on how many shares. So then, but I didn't have an idea of the volatility of where that it's not the same. I hadn't calculated that out yet. Like, well, what's the difference if I buy 40 shares of a $20 stock or 100 shares of this? Which one's going to move faster? That I did a little bit later. So anyway, got my little lesson over here. And I learned about two things. I learned earnings calls can go for you or against you. The worst part about earnings calls a lot of times is they happen after hours, so you can't actually trade your way out of that. It's not like some stocks where if it starts to go down, you can go, oh, I don't think this is going to end well, so you can sell and get out of there. With an earnings call, it's very fast, and if it's after hours, you have to absorb the whole loss. So it's definitely a bit more of a gamble. Certainly, you can make it work too. So I bet on 4, and here's how they turned out. 2 of them did quite well. You can't see it here. I gotta make the graphic a little larger, but it's Salesforce and Domo. And one was up 6%, and the other was up about 5%. What I noticed is usually also, just so you know, when they go up, they don't just keep going straight up like that afterwards. As a matter of fact, usually they correct. So if it jets straight up, usually it'll kind of come down a little bit to kind of correct. So if you're trading like I do, where you may have bought the stock the day before and you're going to sell it, and the earnings call, let's say you can sell it right away after the earnings call, then you're going to get that gain, and a lot of times it'll correct itself. And I played with that a little bit and didn't see that they went up afterwards. Usually they kind of came flat or down, kind of downward a little bit. So anyway, it's a little something I thought I'd just share with you what I've observed. So these 2 were a winner. That was not my problem. My problem was these 2 were losers. Real losers. GameStop and I'm a gamer. How dare you, GameStop? I had a company called Pivotal. They weren't only just losers after the call. They were after hours, and they were the biggest losers stock-wise that day. This one losing 24% and the other one losing 29% of its value. And there was nothing I could do about it. So I actually, sadly, I picked 2 winners and 2 losers, but I had more shares of the losers than I did of the winners. And so those really tanked me, and I lost about $200. Now, that being said, there's good news. Don't cry for me. I did manage to make a little bit of a comeback. Not only just a little bit. Let me show you how the week played out. That's how the week played out. So, and the week really started about mid. So that was from you can see the first week was those first 3 arrows. And then the start of my second week started off here with a little green, that first green arrow, like, oh, yay, here I go again, up, up, up. And then, holy hell, dropped straight down to doom. And that was really hard. And then I worked my way back up. And each of these arrows represents a lesson that I learned. And then I had a huge gain. So as much as they punched me right in the face, I actually made some great trades and had a huge gain, and then an additional gain up there. So I was able to gain all that I lost back and get back on the right track, which was great. Now, the things that I did, the lessons that I learned there, number one, that first lesson coming down was earnings calls. They, especially after hours. Now, Robinhood has a gold membership, which will allow you pre-trading hours and after-hours trading. I suggest that. It's probably a real smart thing. Number one, it allows you some more options after other people have stopped, because you can also look and see what the momentum is behind a stock and know, and then still be able to do something, and do something before potentially the next day when all of the people who couldn't do anything decide to make a decision and tank the stock. So just to give you an idea too, my strategy, which I don't know if I laid out in my first one, is basically I trade about every other day. Now, what I do is I buy a stock one day, and I buy a stock that I think is going to go up and stay up, because some stocks will go up and then they come back down before the end of the day. And then unless you day trade, which you need more money in your account to be able to do that, I think they give you 3 free day trades. And then if you hit a 4th, then they make you have $25,000 in your bank account, which I certainly don't have in my portfolio yet. And so, yeah, day trading is not really an option. It'll be cool when I get to that space so that you can cut some losses faster. But for now, I've got to make a bet on buying stock low that's going to go up and stay up until tomorrow when I can sell it high and reinvest that money in my next day's low stock. So as you can see here, I'll show you the stocks that I picked that brought me out of the chasms of hell. The first one I picked was AMD. You can see I bought it right here. And one of the things that I'll suggest, not only do I look at the patterns, but if you see the little expand button there to the right, this is on desktop. It's nice because it'll show you the volume of buying and selling in red and green bars and how much is being bought and how much is sold, and really watching that and how it relates to it going up and down. I found that I can look at the patterns between that and what's going on in the line graph, and I use that to pretty much predict right at the very bottom, because it had been coming down and went down, come up a little, went down some more, and I predicted that that stock was going to go up, and it was actually also going to go up and stay up until the next day, and that's exactly what it did. And so that stock performed well for me. The next one that I did, which I'm sure you've probably heard of because it's been a rocket ship over the last, well, for a while, but it's really been crazy lately. You're going to see that in next week's video. So anyway, you can see I bought it there at the bottom, and I sold it at the very tip top of that. Now, I could have held on to it and gained another, like $9 a share there, which would have been a significant amount of gain, but it came down, and when it came down that little bit, once it peaked, it was like $50 in 10 seconds I lost. And so I was like, no, after having that huge drop, I was like, nah, not today. So I sold it and just let it ride, just held out and waited till the next time I was going to buy. But Beyond Meat crushed it for me. That was that huge gain that I made in my portfolio. So one other thing I'm going to leave you with. So one day I look at my little watch list here, and what happens when everything's green? So usually Mondays, a lot of times it'll go down. It's a good buying day, but it's not always Mondays. Sometimes Mondays it's all green, and it's Tuesdays or some other day. But this was a new thing that I experienced, which was the time after I sold my stocks and made all my gains. Like I had green, made money on every stock I invested in, which despite that huge drop, like I've made about 3 mistakes in my trading. But if you minus those out, my choices so far have been a rocket ship. So it was 3 wins, all home runs on this one. But then when I came back to invest, everything was up. And one thing that I will tell you, and it's bit me because sometimes you know the rules, but you don't follow them. Don't chase a stock up that's going up. The fact is, our brain wants to because it's going up, and you go, oh my gosh, it's going to just keep going, and look at that. And our brain predicts. It's a prediction engine. So it's predicting, well, if that's what's happening, then the next thing will be the similar thing. But that's not true in the stock world. So you've got to really fight that urge. And I've had to, and I've made a few slip-ups and mistakes where I got into the hype of, oh, this thing's doing great. I'm going to get in and it'll keep going. And yes, I know it won't go on forever, but why not get in and get that little extra? And what ends up happening is, even if you get that little extra, then it tanks. And usually if you can't trade that same stock because you bought it that day, then you're going to end up taking a loss because you really bought it too high, sold it low. So I like to see the red. I like a good stock that I believe that is just having a bad day. It's like people. And I'm going to make my bet on that. So what happened here was, what happens when everything's green and there's nothing for you to invest in? My wife gave me this piece of advice. I didn't listen to it at first, of course, like a good husband. She said, you know what? You don't have to invest again today. Even though that was my day, I sell my stock and then I can invest. It's not a day trade because I'm investing in new stock. But it was true. It was good advice. The fact is, if everything's green, because in this particular day, I was looking for something, I kept looking for something, and I ended up settling for a stock, and then you're going to kick yourself when that stock goes down, because you know what? It wasn't all green lights. You settled because it was the best out of what was left over. So my last piece of advice is, if the stocks aren't going the way that you want them and everything's going up and you have money to invest, don't feel like you just have to keep money in the market. Wait a day, because all that green going up, it's going to equal a whole lot of red going down tomorrow. And then you're going to find the strength of the stock that you want to invest in, and you're going to get it at a good deal. And it just hedges your bets against loss. Because if I'm paying at the top of the market, almost everything that's going to happen, what's most likely to happen, is going to be me taking a loss. Whereas if I buy something really low, and then let's say it doesn't come up, and it actually goes lower, but I still waited, and whatever I waited for it to come down is that much less loss that I could take because I waited and bought the stock at the bottom. So that's going to be the piece of advice. This was week 2. Week 2 was full of lessons. It was, I had my biggest loss, about $200, but I also had my biggest gain, and I recovered. And I learned from that, and that's the key thing is, you just got to learn from every situation. It's generally not random. You may be too ignorant to know why those things happen, and you know what? I learned with the earnings reports and after hours earning report. I learned a lesson, and now when I look at those earning reports, number one, when they're happening matters. I have the Robinhood Gold, so even after hours, I may be able to trade that off if something goes wrong. And I also learned that I used up all of my 3 day trades on little gains, right? I bought a stock and it kind of went up, and I thought, oh, well, this might go back down. Why don't I just cash it out? And I used those 3 optional day trades. If you hit the 4th, then you mess your account up and you got to have a $25,000 in there to do a day trade anymore. So you get 3 free. And what I will say is, the final lesson I'll leave you with is that I use those for gains. But you know what? When I look at all of these gains that I got, if I gain $10, who cares? But if I lose $200, I would have loved to have been able to stop the bleeding. Now, in that case, it was an after-hour situation with an earnings report that happened almost instantly. I probably wasn't going to avoid that. My mistake there was investing in a company I knew nothing about, taking a risk, high risk, high reward, in an area with a bunch of putting too much money into it. I put too big of a position into something I hadn't done before. You know, if you're going to try something new, like, hey, I'm going to try an option, or I'm going to try an earnings call, or you're going to try something different, go in first and test it with a small amount. Because this was something that didn't have to happen. I just never did that before. And I put heavy into something I didn't understand that well, and it ended up biting me in the butt. And it, you know, if we wouldn't have taken that big loss, and then you would have put that big gain that the squiggle up gain, the straight up gain, and the other, if you'd have just put that back up on top there, man, that would look gorgeous. But I had a lesson and I had to pay for it. So anyway, I hope you enjoyed this video. Love to hear your comments. the expensive lessons. If you're an investor, what were your biggest losses? What was your first loss? I feel like people are going to remember their first big loss. Leave it in the comments below if you got some tips on earnings, upcoming earnings, things that you see that I'm doing. If you like the video, give it a like, share if you'd like, and definitely subscribe and follow my journey, because I'm going to share this. I'm already starting off the week, and today Oh man, today was quite a day, so I'll be sharing that in my next video for next week. But I'm excited that you're on the journey with me, and thank you for taking the time. And I will see you next week.